Oh, hello everyone. Wow, that dip was crazy, huh? I hope you guys got some stuff on discount. I went fucking nuts, bought a whole bunch of shit. And yeah, let me see if I can okay, screen share. So today, oh, yo, enable screen sharing. Yeah, okay, we're good. Uh Boom, there we go. Guys, look at this. Okay, so I'm going to teach you about level 2 reading. What is level 2 reading, right? So, well, level 2 reading is essentially sentiment reading. What is sentiment reading? It is using everyone else's behavior to determine your behavior, to figure out what you want to do in the market and whatever. Level 2 is not very easy. It is quite hard. You need to have kind of a pulse for the market. You got to feel it. You got to understand kind of how it works. But through it all, the more that you look at this kind of stuff, the more that you go through these kind of scenarios, you can kind of see how things work out. So let's see what we're looking at right now. If you go on Binance and then you check out information, you can look at stuff that's like real-time funding rate, index price, but what we're going to look at right now is trading data. What's trading data? Well, it's exactly what you think it would be. It is people trading. So let's check out what's the open interest. So open interest is basically how much is in the, I think it's how much is in the order book. It's basically how much money is interested in trading BTC at the moment. And so you can kind of tell that at 305, at like 305, the open interest was high, and then you could cross-reference it on a chart and try and figure out like why it was open interest high at the moment. Let's go and check out TradingView. Let's see what's over there happening. So with open interest, you can kind of check anything out. Uh, okay, let's see perpetuals. Yeah, with open interest, you can kind of check anything out. But let's see what happened at about 3:03 a.m. 3:03 p.m. today. 3:03 p.m. was when we were about to try and break out. So I guess the open interest was that people were trying to short it, right? So usually when market activity starts to peak, then the open interest will start to raise up. So you can kind of tell that like something's about to happen. This is a good time for you to spot that the market activity is about to explode because as you can see, the open interest was slowly rising from 2 o'clock up to 3 o'clock and the lead up to a big move to try and break upwards, but instead it failed and broke downwards. So you kind of gauge the momentum that people are starting to get excited for something. And so, but you're like, oh, but I know where these people are going, but I don't know what they're actually going to do with their positions, right? Like, so what's the point of this information? Well, you actually can know what they want to do. You can look at the top long short ratios for all the top traders and the regular position. So I think that this is pretty much the most important tool. If you take nothing away from me and during this lesson today, at least take away this. When you look at the top trader ratios, you can see how many people want to short and how many people want to long. You can see the rough percentage of it, right? So right now you can see that the top traders 36.92 wanted to long at 3:45 p.m., right? But over here you can see that the top traders by position size a bunch of them wanted to a bunch of them wanted to go long, but a lot more of them wanted to short. Okay, let me speak slower. The top positions, the top trader long and short ratio goes according to the position size. So these are people with like millions of dollars in their account. I don't know what the threshold is, but to be a top trader, you only need to have about I think about 50 grand plus US in your account. But to be a top trader according to position size, it has to be like over a couple 100,000. So you can put more weight into what the traders in the top positions are doing as opposed to just the top traders. And then this is the long short ratio for regular people, like people with like less than a couple thousand, like less than a couple thousand, less than 50 grand in their account, right? So in the order of what is important, you would want to look at the top position traders first. Then you'd want to look at the top traders. Then you want to look at the regular long short ratio. Now, let's see how is this useful to me, right? If we were to go back to yesterday to that big dump, right? At like let's go back to the time frame about 4 hours so that we could go and check out what it was. If you look at the ratio of who wants to go long, right? What time did the dump happen yesterday? Like let's say it happened around 8 o'clock, right? Okay, 8 o'clock. 73% of people were long. on the regular outlook. That means the majority of people were long during the lead up to the crash. But if you're to look at the top traders, 45% were starting to go short, right? That's a pretty big weight, huh? That's like half of the people on the exchange are starting to go short if they're a top trader. If you look up here, you see that only 26% want to go short. So that means that people with the largest position size, which I mean, there's a reason why they have the largest position size, right? It's because like they're kind of better traders. They're starting to see that the market is starting to have a sign of weakness and that it's starting to flounder and kind of fuck up a little bit. So they are usually ahead of the curve to everyone else. So if you start seeing top positions start to go short, then you could kind of get worried about your longs because you're like, oh, these people with a disproportionate size of market share are starting to bet against the market. So this is something that you can use like sentiment. You can kind of use it to figure out what people better than you, I would say, would better than me too, would are doing
The
with their
whales,
money.
the sharks, and the dolphins.
Yeah, like the whales, I suppose, right? The whales and the sharks. And it's transparent. So like it's great. So if we were to go to the 2 hour time frame, let's like narrow down what's then happening in the 2 hour time frame. Like, oh, it's almost 50% of them are going short and like 1.16. That's the ratio. The ratio is nearly 1, which is so insane. If you were to go back to like a smaller time frame over here, I was looking at this chart as it was happening. Man, I have no idea. Yeah, I was looking at this chart as it was happening, but it doesn't go back that far. But it tells you when the majority of people are going short. And yesterday it was like 70% of people on the 5-minute chart were short in the top positions at like 42K. Yeah, like 70% of people were short. So that basically gave me the signal being like, yo, these people with a disproportionate amount of money are going short, while everyone else thinks 42K is the floor. We're obviously going to go lower. So you could use stuff like that to figure it out. Now, where could this go wrong? Well, whales are people too, and they also fuck up, right? They also mess up all the time. And so this kind of helps you determine a bias in the direction of where the market will be, but in no means is it a guarantee. But it's just something else that you can use to figure out like what's going on. So if we were to see what's going on right now, right? Let's make a little prediction now. And let's see if it plays out by the end of this lesson. So okay, so most people are going long, but the people here are kind of still iffing out to being short, right? The thing about this, right, is that it also takes into account like okay, it doesn't take into account maybe in the top positions there's one guy that has like $100 million and everyone else just has $5 million. That one guy will still just be a percentage point here, but like you know he has a disproportionate amount of influence in the market. So you have to be careful of outliers sometimes because that one big whale can shift the entire opinion. So the reason why sentiment analysis is so hard to do is that you need to factor in all these little externalities as well. But it kind of gives you like little tells on what's going on in the market. So if you see in the long ratio, you can see that most people are going long. This also means that you can get the general vibe that people are starting to feel more greed than fear.
Sorry to interrupt. Do you use the fear and greed index as well online? Do you look at that?
No, I don't. I just use this.
Okay.
This is my fear and greed index. Yeah. So this is the taker, and this is last of all, this is the taker and buy sell volume. This means that basically when you market execute an order, whether you market execute a buy or you market execute a sell, it's a taker because you're not a market maker. When you're a market maker, you put liquidity into order books, meaning that you put an order in the order books. So this basically means how eager people are to sell. So I bet that if you were to look at what happened yesterday, right? If you were to look at what happened yesterday, boom, look how big the market taker and market maker were. People were mass selling because they were freaking out, market executing their weak fucking hands. And then all of the greedy people were market buying because they weren't as disciplined as Marcelo, being like, I'm gonna go and find the point of resistance because during a dip, that never happens. It's gonna hit the floor and it's gonna decide when to bounce back up. So people will just market execute inside to try and catch a trade. I market execute 70% of my account yesterday, and it was insane. I was like, okay, here we go. And yeah, like people just do that during dips. It's super not safe, but that's the only time where you can make 30% in like 3 minutes. So you just take the risk sometimes. And yeah, as you can see, people just start to market execute, but then you can see at 2 a.m. it started to flatline a little bit, and it stopped being so exciting. So then you kind of tell that the momentum is dying down because people stop market executing, right? And then it dipped, and then it dipped, but then by 8 o'clock, let's look at what happened at the chart at 8 o'clock. At 8 o'clock over here, it started to dip even harder, right? Then the market execute started to get larger and larger because people were starting to freak out again. So you could just use tools like this to kind of tell how people are freaking out and stuff. So I'm looking at this in the larger time frame, but if you go to a smaller one at 5 minute, you could day trade with it. You could really like just day trade because momentum builds up. Like it goes up in waves. It doesn't just shoot up. It's like curve, 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 curve. So if you see it building up or slowly building down, you can kind of tell whether there's excitement in the market or not. So how I like to use this is that if a coin is going to break out and stuff, usually the taker volume is huge for the buy side, and so I will see if it's slowly going up like linearly, or if it's not, and if it's not, then I probably should get out of the trade because chances are it's going to hit a point of resistance, right? So how I like to think about it is that the TA, the charts, tell you where the point of resistance is, but the sentiment analysis gives you kind of an understanding of how likely it is to break through. And I've been using this for like a year already, and I have to say that it is 75% accurate. Yeah, so that by no means is that like a great like people want 100% success rate, but like, if that was that, then I'd be way more richer than I am now. And yeah, but out of the 4 times that you're going to do it, only 1 out of 4 times this wouldn't give you a good clue, but the rest of the times it will probably give you a good idea. So let's also take a look at what else is there that we can look at. You can look at the funding rate history. Wow, funding rate history. Why is this important, right? Funding rate is essentially what you pay for to borrow to have a perpetual future contract running. What does that mean? It means that this is basically the amount of money it costs to borrow, I guess, what's going on. So when it is positive here, it means that there are more people going long than there are people going short, right? So if you were to look at, let's say, 0508, right, like 5th of May, 8th of May, then you would see that there probably was a significant dip in the market in this day that caused a whole bunch of people to go short. And so if we were to look at the 5th, you would see that it was this day here. Oh, yeah, it was this day here. Well, I guess TradingView is kind of weird because I am in Singapore time, and TradingView is in Singapore time, but this Binance thing is on US time. So let's just go. So what happened was that when this dipped down from 58K to 53K, a lot more people went short than they were going long. And that basically gives you an idea that a lot of people are betting against the market. But why is that important? Because that's where liquidity comes from, right? When these people go short and they get liquidated, their liquidation is actually a buy, right? That's what a short squeeze is. So when the price goes up and they get liquidated, they automatically will buy back the position that they borrowed, and that will add more to the buy pressure. So if you are seeing that there's a large amount of people going short, but you have belief that the market is going to pop back up. Where are we? 5th of April. That the market is going to pop back up. Yeah, that the market is going to pop back up, then it will add to the extra volume of it going up. Right? So you could even wager, right, that because the liquidations were so unordinary, because everybody was expecting BTC to just do this, bomb, right? But instead, it went a little bit longer before it did that. That these people were pre-anticipating a large drop, and they fucked up. And so when the price reversed up just like here, they all got liquidated, and then it added to an even more larger buy volume up here. So then the actual whales would be able to sell into this pool of liquidity over here. So then that's why the volume went all the way up. So the reason why the price spikes up like this, but the volume is so low, is because when these people get liquidated, they market buy the order. And when a whole bunch of people get liquidated at once, which probably happened because I bet their their either their liquidation level or their stop loss was at 60K, that it just shot up on very low volume because people were just market buying because they had no choice but to market buy. So from there, you could kind of tell that, like, okay, well, now the whales are going to dump into the liquidity, and that's exactly what they did right after. So you could tell fake outs from here, and you could also tell when roughly the market bottom would be and when something wouldn't be the bottom. So when we were trading here at like 49K and then at like 43K, people were telling me, like, is this the bottom? Is this the bottom? This looks like the bottom, right? But I was like, no, this is totally not the bottom. Do you know why I knew that this was not the bottom? It was because when you look at the funding rate, it was still really fucking high. That means a lot of people were still going long. And so it can't be the bottom because a bunch of people still have faith in the market. The bottom is when everybody freaks out and starts to go short. And that's what happened here. And that's why I thought that yesterday was the bottom. See, so I don't know if you guys recalled, but in late April, I told everyone that I'm selling everything and I'm gonna wait for this to happen. And so I held off buying here, here, and here, while everybody else was buying here, being like, buy the dip, buy the dip, buy the dip, right? But I managed to buy the majority of my stuff here. So I bought the dip. And the reason why I knew it was the real dip was because of this. Everybody started to go short, right? And then I was like, there we go. That's the fucking floor. You
Sentiment.
see? Secret tools, man. Nobody knows this. Well, I'm sure a bunch of traders know this, but retail traders, they don't know this. It's so easy. It's so easy. And you lucky few get to find out my secrets.
Um, can you does everyone understand the funding thing with futures? Just have a bit of a pause there. Um, and how the funding rates, you know, they not the funding rates, but the funding fees get charged every 8 hours on a perpetual contract. So every 8 hours, you could also use this to basically see when people are pulling in and out of the market to avoid paying fees, right?
Yeah. And you just see everyone's funding rate. So like IOTA, everyone is going short on IOTA. So, maybe buy some IOTA, right? But not financial advice. I'm just saying. Sometimes when the funding rate is really short, it really means that there's a reason why everyone is going short. But for occasions where you want to catch a dip and you see that it's going through a continuous downtrend, but it's not, but the funding rate is still high, it means that there are people still going long, which is also the reverse of a short squeeze. It's like a long squeeze, right? Because when these people buy and when these people buy to go long and it doesn't work out, they're forced to sell at a lower market price, and that just becomes a market sell. So that's probably what happened here. This huge cascade was everybody did not expect a 50% drop, and they, even if you were leveraged 2x, you would have lost all your money. So just think about that, guys. Think about how fast all these people lost their money. What's that website that you can go to check out liquidation? Oh, Coinalyze, I have it right here.
Yeah.
Let's check out what the liquidations look like just to see everyone's sadness. Oh, I am led with liquidation chart. Let's look at the 1 hour. Wow, look at that. Look how many people got liquidated. Look at that. That is billions of dollars.
I think it
It's
was
just gone.
350 billion
$250 billion, guys. And all of that just led to a huge cascade of bam, 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 bam. Yeah. So that's it, man. The reason why I would have thought that this would have been the bottom, but we didn't have a V-shaped recovery. You see? Right now, we're gonna try and break out above here. And if we break up above here, then it's great, man. We're probably gonna touch 60K again before crashing back down. But I'll get into that another time. But for now, yeah, you can kind of tell. You can kind of tell what's going on by looking at these kind of things. So yeah, do you guys have any questions?
Putting it into a nutshell, TA and market structure helps you figure out or at least analyze the market and where things are going, and then doing sentimental analysis, fear and greed, funding rates and all that, using the MFI, that can help you, I guess, figure out the momentum of how fast something is going to move. Would that be a fair thing to say, Marcus?
Yeah, pretty much. It basically tells you whether you have enough to break down the gate. Yeah, which is super important.
Nat says, I don't seem to have any of these links on my Binance.
You do, bro. It is just here. Or why don't you just type in the code like this? Right, futures dash funding history, that kind of stuff.
Yeah, it's
Yeah.
not in normal.
Sometimes it's hard to check through, but I think you could just check information and it shows up.
Yeah, I just don't have that same links as you. I don't have leaderboard or bonus.
Oh, well, you can just go on the website because I'm not even logged in.
Yeah, I logged out as well, and I literally all I have is trade markets by crypto, but I can type in the URL directly.
Yeah, I think it's better if you do that.
I had the same thing. I had the same thing yesterday. Just type in Binance.com, let it go to that, and then you'll get your future. You'll get your futures. Like because it kind of goes to a default for a country or a language.
Yeah.
Just type in Binance.com, let it refresh.
There we go. Oh yeah, thanks, Trevor.
Yeah, I think we just need to directly have a direct URL to get to it.
Yeah, maybe Binance just doesn't want so many people to know because this is a super top secret.
Sorry, mate. If you go to the top right-hand side of the browser, the Binance browser, you'll see it says English at the top right. Can you see that?
Yeah.
Yeah. If you click on that and change it to, I think, English US. Oh, just English, not English Australia. Can you just put it on English?
Yeah, I'm in English actually.
Does it come up with futures now?
No, I don't have futures.
Okay.
Yeah, and the derivatives I can.
Yeah, go to derivatives.
I have. Yep, it's working now.
Yeah. You have to be in the.
Yeah, it's not that intuitive.
The way you can tell is look at the top left logo and you'll see either Binance or Binance Futures. So if you're in the regular spot trading, margin trading website, it'll just say Binance in the top left. And if you're in the futures one, then it'll say Binance Futures. They're actually two separate websites.
Yeah.
Cool, thanks, guys.
All right, guys. Let me show you something else why you never leverage buy a dip, right? Look at the amount of people that were liquidated for longs and liquidated in shorts. That's absolutely crazy. That means that the price was whipsawing back and forth, 10s, 20% in like seconds and like minutes, and these people were just putting their money in and just losing it right after. So always spot buy dips. And then if you want, you can add margin later on, but I don't recommend it. I actually just lost like a whole bunch of money because I margin longed here and it dropped back down here. But yeah, don't do that.
On it.
Sorry, what?
I think that was just Karen.
Oh, okay. Okay, guys. Yeah. So that's basically sentiment analysis. There's a lot more stuff that you can look into. Things that Kevin looks into for macro trading. Things like inflow outflows. Yeah. I need to sneeze, but like it's like in between. So yeah. Yeah. So you can also look at inflow outflows, which Kevin will show you later. That's more of like macro trading for like daily timeframes. This is more for like shorter time frame trading, but also like just to get a general vibe on what's going on in the market. If you were to look at the daily as well, it also really helps to know what's going on over here. You can see that a lot of longs were liquidated when it dropped down to here. You can see that it went like this, and as it was going sideways, people were starting to be a little bit afraid, and nobody was really getting liquidated. The shorts were starting to get liquidated. And so when there's a lot of liquidation in shorts, you can kind of guess that a lot of the buying volume going up here is artificial, right? It's not like super real because these people are buying against their will. So that's super important as well to take a look at. So if you see that something is starting to pump its way up and you're like, ooh, you know, like that's pretty dope, but you see that there's a disproportionate amount of shorts being liquidated per move, that you can kind of guess that maybe these moves are a little bit artificial. Maybe a whole bunch of people are 20x leveraging and they're just losing all their money piece by piece. So I think that this bull run is the age of leveraging, which is why we're having such insane price movements. So yeah, and if what's super crazy, right, is that if you look over here, more people were getting liquidated on the 18th of April compared to today. Right? That's so crazy. That's so crazy because yesterday was a tremendous drop. But yeah, these are the little insights you get to see in the market by looking at this page. Maybe it's just on this exchange. If I really cared, I would look through all the other exchanges, but this is just as an example. You guys can do the legwork yourself. And yeah, that's about it. So combine that with the RSI and the MFI, and you have a full sentiment analysis trading suite.
Could you run through a typical sort of like setup that you would be looking at, just so people have like a reference and framework to look out for?
Okay, well, let's say I'm long, right? Okay, well, I am long right now. So let's say I'm long, but I want to only have a short-term trade. So I'm waiting here and I see, oh, there's a level of resistance over here. We kind of popped up above it, but we're kind of failing to get above. It kind of looks like a really ugly pattern, but the RSI is kind of bouncing midway. The MFI has bounced up, but it's curving itself back down. So I'm like, I'm not sure if we're going to break through or not. Maybe let's take a look, right? So then I'm going to go to BTC, and then I'm going to check the 5-minute graph, and I'm going to see, okay, open interest. Wow, a lot of people are trading. Seems like maybe we'd be able to break above this time if a lot of people are trading. So that means that the volume is there. Let's look over here, but oh no, looks like a whole bunch of people are starting to go short. Like the top traders are all starting to go short. If I look before, okay, were they always short? Not really. They've started to get more and more short. So at 3 o'clock, is this only 5 minutes?
Yeah.
Oh, no wonder. I'm at the hourly. I need to look at the 5-minute. Oh, look, a lot of people are going long. See, most people were short at about 3 o'clock, which is about here. Most people were short, but it failed to break down. So a bunch of these people probably got out of their trade on the second bounce, started to go up higher. They started to reverse their position. Oh, notice they added on to their position. So they start to add on to their position. More and more people start to go short. More and more people start to go short on the top traders. So let's see over here. 45. Oh, it looks like more people are starting. Oh, nope, it's leveled out. So at 320, they were long. And so the overall market sentiment is that since it failed to break up above here, people are starting to go short.
Does everyone get this so far?
Does it make sense that I'm doing this, or are people just seeing me drag my mouse across a line?
Yeah, I just have a question. Just trying to understand how to read this chart. I understand the green and the red, the short percentage versus the long percentage. But the actual line that you're running through, can you explain what that is?
Bro,
How to
I'm
read
gonna
that?
be completely honest with you. This is supposed to be the long-short ratio, but I also do not really know how to read this chart. I know how to read the words in this chart, and I think that that's all that kind of matters, because the chart is just a visualization of the data that you get in the box.
When Long short ratio is basically when it's long, or a higher number means that more people are going long, and the lower number means more people are going short. So you can see there, like there's 70%. Oh, sorry, just hold it on.
Oh, sorry.
Yeah. So over there you can see that there are more people going long than there are going short, and so the ratio is higher because it's the ratio 2.42 is based on the longs. Like long to short, it doesn't go short to long. It's not like risk reward or anything like that. So there's basically more people going long, according to that.
Yeah.
So just don't worry about the line. Just read the green and the red, basically.
Well, no, the line matters because it's the ratio of how many people are going what to what. But like, okay, if I were to just rudimentary explain, which might not be right, is that the red is basically the amount of people going short and the green is the amount of people going long by bar graph percentages. Overall, this is 100%. So this is 30% and this is 70%, which basically looks like a ratio of 7-3, right? If you look at it. This line over here basically tells you the amount of the ratio of people going long and short at this current time. So yeah.
Yeah, so if the line
yeah.
down, then there's less people going long, basically.
So I don't think that we're going to be able to break up above this actually, because when I look at the long short ratio, it doesn't look very convincing. If I look at the maker taker volume, oh, it looks like there's a big buy volume starting to spike up. So then now I could think maybe we will break above this because people are starting to market buy. So I would probably have to look a little bit more, maybe wait for a larger time frame.
Would you say, just playing devil's advocate here, would you say that you could also use this on Heikinashi candles, like combined, or
On what?
on Heikinashi candles? Do you use that at all, or
What's a Heikinashi candle?
Japanese candlestick?
Oh, right, like this, right? Like the candlestick patterns.
Yeah, but the Heikinashi. So if you click on the candlestick to the left, next to compare,
Okay.
and then
This one.
next to compare. No, in the top menu, and then go to Heikinashi.
Compare.
Next
No, this
left,
one. Ah, I see it.
and then Heikinashi.
Ah, I've actually never used this.
Ah, cool. Oh, well, that's something I can go through.
Oh, Kevin can teach me something.
I go through this
Yeah,
on shorter time frames. And
I've never used this.
So this is something that I've been doing that until Marcus mentioned sentimental analysis. I didn't actually realize I was kind of doing that, but I just didn't know what it was called. So you learn something new every day. Yeah.
So it says it's gonna go down too.
Yeah. So basically, the way to read that is. Do you want me to share my screen and then?
Yeah. No. Go for it. Go for it. All right. He gets the basin. Wait. Let me finish up.
Oh,
Okay.
yeah.
So because I'm looking at all the sentiment analysis stuff, it looks like the market's gonna go down. Right. But on a longer time frame, it looks like it's gonna go up. Right. So maybe So what I would say right now is that like, okay, so maybe I would keep my trade in because it seems like. Yeah, maybe I would keep my trade in because it seems like we're gonna go long eventually, maybe in the next couple of days. But right now, it looks like we're not gonna break above this. So if I was day trading like an 8x leverage, like 10 grand, and I was trying to make like a good $5,000 to hold me over for a couple of days or whatever, I would use this sentiment analysis to be like, okay, I'm gonna get the fuck out. But because I'm going long for a significant period of time and I have such a good entry, I'm just gonna hold on. So it depends on your situation. Another thing that I would look into is to just make sure that you don't confuse your timeframes. Make sure you know what you're looking for in this trade. Don't let this determine what you're gonna trade, but more so determine whether you want to get in or out of the trade. You know. I hope that makes sense. Basically, what I'm saying is that like if you want to go long on something, go long on something, but like this will tell you when to stop, when to quit it, basically. So right now there is the top accounts and the position traders don't line up together, but when they do line up, whereas in 45% of them are short here and 45% of them are short also in the top accounts overall, you could generally guess that the market is going to go down. These traders, they're usually always long. And when they start to go short, then you can start to go long, because these people are the liquidity that you take from. These people here are the ones who give you their money. Yeah, just let that sink in. When these two align and this is wrong, this is probably right. And these people are almost definitely wrong. When all three of these line up, then the market is going to explode because everybody's going to go long. Sometimes when everyone is long, you can ride the wave, but when the top traders start to go short, followed by this, then you should get out of the market, because these people are the ones that will basically set up the movement, and these people are the liquidity that's going to be eaten up.
We should probably have that written in a PDF or something. Like between.
Yeah, probably. Yeah.
Yeah.
Yeah, Mark, I got a question, Marcus.
Shoot.
I'll be honest. I'm struggling to. I don't know if I'm getting confused or what. But if you highlight a candle like that, if you go to say the last trade along short, right, and you highlight that, I'm just looking number wise. Up the next one.
This one.
Yeah. Say that one. So it says 44.78% short and 52.2% long. So there's more people going long than short, right?
Yeah.
Right. And why is that? Why is that showing the short position on the trend? Like that's
because people are starting to go short. So this is the long short position ratio within that 1 hour that this is occurring.
Right.
So like, I mean, people hold shorts and longs for a significant amount of time sometimes, right?
Right.
So this is the amount that's going on within the hour.
Right. That's the ratio.
Yeah.
Right.
That's the ratio that's been changing within the hour.
Right. But there's still more people going long than short.
Yeah, but I mean, 44 to 55%, that's not very good odds.
Yeah.
Right. That just shows that the market is at a period of indecision. If you were to go back to like some other points of times, like the long short ratio here is a lot more biased to one side than to the other. Probably not here. Let's go to the daily, because the market's been trending sideways for so long. It's really hard to find a good example right now. But sometimes when you see that we're continuously trending upwards, one side will be like 70% and the other side will be like 30%. So like, yeah, like it'll look like this, you know, like 60% to like 30% and stuff. But because the market has been in such a period of indecision for such a long time, it's really hard to tell. But you can kind of guess from like the minutely over here what's going on. So the daily, I don't really look at the daily because I don't really trade sentiment on such a long time frame, because sentiments can change in like an instant, right? One day I love you, one day I don't. So usually I use the smaller time frames to determine my sentiment trading.
Just like artist management.
Yeah, I suppose. Huh?
I think I know. I'm same with Marcelo. Like I'm also trying to understand that line, but I think I got it. Maybe this can help answer what Marcelo is asking as well. So basically, you look on the bar chart, it will tell you in that hour. In that hour, you basically have the ratio of who's long and the ratio of long and short, but then the line is more fine-tuned. It gives you the trend in that hour because it'll basically move up and down that bar, the actual line. So then it'll show you where people are leaning towards in that point in time, rather than looking at the whole hour as a whole. Looking at the whole hour as a whole, you can see majority of people is either long or short, but within this moment, it's more people leaning towards one end, and they'll kind of tell what's going to happen next. Is that how you would explain
Yeah, that's
it?
how I interpret the line.
Yeah.
That's how, yeah. All right.
Yeah, that's how I interpret the line. Yeah.
Yeah.
So essentially, yeah, that's basically it. Oh, yeah, I could go into order book reading as well, which is something that I touched upon earlier before. But yeah, combine all of that together, and that's essentially the basics of sentiment reading. Disclaimer, I don't know if everything that I said here is what Binance actually intended by showing you these charts, but this is how I use it. And whether what I said is technically right or wrong, it works for me, and hopefully it'll work for you. Right? Maybe the long short ratio, I don't actually fully understand what that means, but when I look at the line, I kind of just at least know what's going on. So yeah, just a disclaimer right there.
Cool.
Yeah, okay, I guess that's about it.
Everyone cool with that? No?
Any questions? Anyone? Shoot.
Nope.
Nope, everyone is good. Okay, super awesome. Yeah, but anyway, yeah, I don't think that we're gonna break above this. Let's take a look. Nope, looks like we didn't break above it, huh? But we're trending down the RSI. So when the RSI is flat like this, typically it will go up in a curve like this. Yeah, you see, like this, curves goes up. But sometimes when you get drops like this, right, like this big drop, it's parabolic. So it's not curving, it's starting to tilt down. See, it tilts down. So when it tilts down like this, get out. When it curves like this, go long. So you see, sometimes you get all sorts of conflicting symbols. Look at this. You could just be like, oh, okay, this is a rising wedge, right? So then in this case, I'd be like, okay, well, I guess the sentiment analysis is not super strong because like the TA says that I should go long. The sentiment says I should go short. So then you just have to use other factors to kind of figure it out. So yeah. You know what I mean? This is just another tool in your toolbox. So when everything starts to line up, then you know that there's a definite move, and then you could bet really big. Yeah, but I encourage you to fuck around with this. Like really. Sometimes it may look like it's never right and that it's never handy, and then one day you get it where all the signs align, and then you can make 100 grand in a day just by like doing something super risky. But because everything lined up in your head, you have a good sense of conviction. And that's essentially what all of this is, right? Like you could have just bought, you could have just sold, and at the end of the day, you would have made money. But these things are to just make you feel better about your decision. And so later on, if you do mess up, you could say, at least I thought I was doing the right thing in the moment and everything looked right. As opposed to, wow, I had no idea what the hell I was doing. I just lost all my money.
Yeah, you can
So
analyze
yes.
afterwards.
Yeah, and you can analyze it afterwards and you can see whether sentiment analysis works for you or whether it doesn't. Right. But yeah, okay.
Do you guys use CCI as well, or just RSI?
I don't know what that is.
Yeah, I personally don't because I prefer RSI and MFI. I have an indicator where I combine both. But CCI is good, but it leans more towards stocks. So I find it's more. It's a weird thing. Like we've been talking about how trading is all about not being emotional and reading psychology and all that sort of thing. But because it's crypto and it's new people buying into crypto versus say traditional stock traders and all that sort of thing who have that level of knowledge and experience and tools from like the old era. It's kind of like, I don't know, if you look from a biblical sense, there's like Old Testament and New Testament stuff. And Old Testament is like stocks and trading and commodities and whatever, the SPX and Dow Jones index and all that sort of thing. And then crypto is like partially that, but then also just Dogecoin and cum rocket and stupid shit and people's psychology, playing into it. So, yeah, in terms of the indicators, the stuff like what Marx is going through now, which is sentiment analysis, I mean that's born from stock trading, but it's also based around the psychology of like the youth of today and how they're trading and trading on impulse or the fear and greed index, the human conditions, which are really difficult to quantify, but on the charts you can sort of see money talks basically, right? And you can see where people's money is going in. So the MFI, which is the money flow index, is a little bit more accurate to where the money's flowing, as opposed to the CCI, which is on commodities. And like, you know, is a container of gold being shipped to India, or a container of carrots being shipped to the US, or something like that, based on commodities. And oh, carrots aren't probably a good example of a commodity, but you get what I mean, right? It's like the CCI and things that are based on stocks and shares, they're based on things that are trading in the real world. So they're accurate to those numbers coming in. But yeah, these other indicators when it comes to crypto, like all you can really see is, you know, did someone deposit or withdraw into a wallet? And that's it, right? You can't tell what they use the money on, and so on and so forth. Cool. How's everyone's brain capacities going? Do you all need a break, or if we're Chardon here, do we need to do a meditation or something? I'll share my screen, and I'll share something that I trade from, like a way that I trade from time to time. And like I said before, it's not really any particular name or technique to this. It's just stuff that I've built up from watching different things. And it is kind of, yeah, it uses the MFI. So the MFI is over here. So for anyone who doesn't know, you just go to indicators, you type in MFI, oops, yeah, or money flow index, and it's a free indicator. And I use this in combination with Heikin-Ashi candles. So Heikin-Ashi is this one up here. And Heikin-Ashi candles, you can see already at face value, they're really, really different to, you know, normal candles, but they follow the same strategy. But the thing that's inbuilt in Heikin-Ashi candles is that it takes into account the volume and momentum of price movement. So as opposed to reading normal candles where you've got, you know, the tops and the bottoms and the wicks, the way to understand a Heikin-Ashi candle is basically when you've got wicks to either side, then there's indecision, right? Because the entry level, so the open of this candle is the halfway point of the previous candle, right? You guys can see that the open, this candle here, wherever it ended here, is the opening of this next candle. And likewise, this candle moved up and down, whatever happened, the opening is this mid-level. And based on that, the guy that you know, created this, basically what you can tell is that whenever things are indecisive, so when there's wicks to either side, you basically wait and sit out of the market. And then when you see a candle like this where it's got a flat bottom, that means it's bullish, right? It's a bullish candle, and you see these bullish candles here, they've all got flat bottoms. And so right away you can sort of tell where the market is trending just based on the candle colors, without even having to draw a trend line or anything like that. And then likewise, it works the opposite. When you start seeing these bearish candles where they don't have a wick on top and they start pointing down, then that is a bearish sign that things are moving down. And you can pretty much see from the candles, right? Like I didn't change the colors or anything like that. This is just how they are. It's greens and reds. And the way I use that in combination with the MFI, which is down here, you can see that it usually correlates that when the MFI is in the overbought region, then you know, price starts moving down. And then when the MFI starts getting towards the, you know, oversold region, then price starts moving up. Right. At the moment, I'm on the daily chart, and you can see how that sort of movement is forming. And the way I use this in particular is on any given day, if I feel like dipping into the market, I still do my regular, you know, charting, like support, resistance, and all that sort of thing. Like that's what I prefer. I prefer to see where bottoms are and order blocks and gaps and all that sort of thing. But in terms of sentiment, I just look at the 6-hour chart and look at the Heikin-Ashi and go, okay, in the last couple of hours, so each of these candles now, right, they're 6 hours worth. What's the sentiment been like? Well, obviously we had that big drop yesterday or last night, but then over here on the MFI, we're at the bottom, right? And things are starting to turn up. We've got this candle here that for all intents and purposes, looks bullish, right? Because it's a flat bottom, but there's still 2.5 hours left to close on this candle, right? So based on what I see on the candles, I literally simplify this to just going, is it a green day or is it a red day? And is it bullish or is it bullish or bearish or indecisive, right? So in this case, because this is a green day and it's bullish, and we know that the market's kind of recovering, I go down to the 1 minute candles time frame, and I apply the same thoughts, right? And go, okay, obviously that's been the rally that we've had. You know, this was the bottom. Oh no, this wasn't the bottom. The bottom was over here. Yeah, 30K. And you see their price has been moving up, and then in the higher time frame, I already drew that the order block here. This is where things are kind of like, you know, people are umming and ahhing on what's happening, and I look at the MFI. So the MFI is at the bottom, which means there's a potential option, potential to buy, you know, at somewhere here if it turns around, and then you'd sell toward the top. And what I look for is I always, so if it's a green day, right, because I mentioned on the 6 hour candles, it's green. So I'm only looking for longs. That's my bias, right? Even if I'm like, oh, there's a short opportunity here and there's a short opportunity with there or whatever, with this particular trading style, you just go with it's green, therefore I'm just looking for longs. So the idea is you basically just wait for whenever this red, whenever the red candles stop or drop, and you can see, like, say as an example here, right? Wait, where's the previous? I'll go to where the previous green candle was. So say here, say from the bottom up, right? Because we're looking at longs. So the other thing I wanted to say is that the waves usually happen in threes, right? If there's a pattern that hasn't been formed, it's usually like three waves and then a drop. So over here you can clearly see that this was a flag, right? That's what we drew in before. And then on this, where things started changing, so you can see that was bearish, but then there was an indecision candle here. On this candle, it's not quite bullish yet, right? Because you can see there's that little the little tail at the bottom. So say you did a long entry on the next candle. So I'm just gonna map this out. If you did a long entry from this next bullish candle, right, and then you set your stop loss. Actually, on on this, I actually don't do stop losses because this is my spot trading, like quick grabs. So say you set your entry there, or even on the next bullish candle, depending on what you're doing or what you're looking at, you would set your take profit at the next what am I looking for? The next bearish candle. So see how that's got a flat top. Oh, let me just take this off. I hope I'm making sense so far, right? And yeah, you can basically follow this and go, okay, if we're looking for longs, we're just going from the bullish candles up and then the bearish candle down. And obviously, if you keep doing this, right, you're gonna get some, you're gonna win some, you're gonna lose some, but essentially there's just you can just see, like, there's trades to be had in each of these pushes up, right? Wait, where's the magnet? Yeah, so you'd always set it below the wick of the previous one. And you might lose some along the way, but again, I'm on the 1 minute candles, right? So if this was, there's the trade there, and then you get out on the next bearish candle, right? Again, the stop would be below previous market structure. You can basically trade these all day, right? Up and down. What are the other things that I'm missing? the where it can go wrong is, like, say here, if you traded this, right, traded this candle, had your stop loss there, and then obviously the next bearish candle was like down here, you'd basically just get out of the position. But if you didn't set a stop loss, then this candle here would have stopped you out, and you would have, you know, triggered a stop loss there. But then all you do is move on to the next trade and just go, okay, there's another bullish candle there. Set the stop loss here, right? And then trade this up to the next, whenever the next bearish candle forms. So this form of trading is like, because it's on the 1 minute candle, you can literally just sit there and go, wait, and you know, it's even better when like the MFI touches the bottom and you go, okay, I'm gonna wait for the next bullish candle, and then bang, you're in there. And usually you get the bigger moves when the MFI is lower. But like in this case, because the MFI was halfway, it's still considered bullish, right? And basically, yeah, you can trade these and literally make trades every, you know, 10 minutes or so, like 10, 20 minutes. That's because all these candles stand for 1 minute, right? The one thing I wanted to point out though is what you're looking for in these. So I don't trade this on leverage, or if I do trade on margin with leverage, I go as high as 2x, right? No more than that. And I look for, so on the higher time frames, I usually look for at least a 1% move. I think I've gone through this before. But over here, as you can see with the reason I like trading this with Bitcoin is you get, like today, the move from the bounce from the bottom today was 30K and we're up now at 40K. That's a $10,000 move, you know what I mean? So literally with this, if you do the math and you just go, okay, I'm just going to get 1% of a movement, that's literally one candle. You could, you know, if you on spot trade, if you're doing this, even I used to do it before on 10x leverage, which I wouldn't recommend people to do when they're beginning doing this. But you can imagine if you were doing 10x leverage, buying in on a bullish candle and then just getting out after 1% and being strict with that, you don't even need, you know, EMAs or whatever other indicators. It's literally just, are we at the bottom here? Is the candle green and a flat bottom? Cool, buy. And then you reverse it and go, okay, is the candle red? I'm going to sell, right? Where I've seen people do really well with this is when they stick to their rules, because they're, you know, like, because you're in the chart in the minute as you're doing it, it can be like tempting to sort of go, oh, but what if price comes down here and then shoots back up? I should wait for the next run or something like that. But then you basically, you could shoot yourself in the foot, because you're like, okay, I'm going to wait until it reaches, you know, a price up here, and then that price never comes because, you know, you're being greedy or something like that. So this is where you really have to be disciplined and just go. So you don't get out on an indecision candle, you get out on the bearish candle, right, with a flat bottom. Can people see that?
Guys, if you have discipline, this is basically picking up money off the floor. Like, sometimes it really is like that. But when you wait for but it's like picking up money off the floor, but it's raining acid. So if you try really hard to pick up that bag of money and you're struggling in the rain, the bag is just going to dissolve and you're going to lose your clothes too.
Yeah.
So it's about going in, taking as much as you can while you can, and getting out as quick as you can when you trade on like the minute time.
Yeah. So the way I do this, so I'm just trying to think, I should really document this. The way I do it is I don't go for longer than an hour doing this thing, because it just does your head in, right? But you can make a lot of money in that hour. This is the one that I mentioned. I traded Doge over the weekend. 2 weekends ago, I think Charlotte and I were joking about it, because, you know, I don't hold any Doge, but I was trading it, basically doing this because the sentiment was, oh, everyone's jumping on Doge and, you know, it's gonna go to the moon and whatever. So I'm like, cool, I'm just gonna sit here and buy, sell, buy, sell, buy, sell. And you can do this on any chart. And what I would recommend looking for, if you're gonna try this, like, try it on paper trading first, obviously, but have an idea. So again, starting from the higher time frame, have an idea for how much the price movement is going. Like, say, you know, the general range of these drops, you know, can be roughly, what's this, 13%, you know, or whatever the general range, or the most that's happened so far, as we know, is like 50% or something. That drop was 27%. So have an idea of how big and small the candles are, because if you're jumping into the minute time frame and say the range is only like 0.3% or something like that, it's not worth it. You're going to be paying more in fees jumping in and out of the trade. So I definitely look for things that are you know, more than 1% of a movement, which is really good in crypto. But if you were trying this on Forex and stocks, which I used to do as well, it's a bit of a harder slog because you're like making cents in the dollar. So yeah, hopefully that makes sense. You know, you can see it like on this chart here, right? If your sentiment for the day, when you were looking back here and say, you know, this candle here was a big drop, right? From 56,000 down to, what did we hit? 48, right? Cool, there's a big drop there. The sentiment is that it's bearish. So then you basically just go, okay, at the next candle opening, the next bearish candle, if you miss this one, you just take a position there, set your stop loss up there if you're even using one, and then just ride this down until the next bullish candle. But you wouldn't do this on the 6 hour. You just basically go, okay, I'm bearish for this day. And then you go down to the 1 minute again, whatever time frame, whatever time you get on. And let's see where that move was. Somewhere up here. Go back. Okay, so you know, this was roughly that 6 hour or start of the 6 hour candle. And so because we know that we're going short or we're looking for shorts, you wouldn't be entering in on something like this, even though it's tempting, right? I mean, you could, but I'm just saying, following the trading rules, your bias is red. It's a red day. You're looking for shorts. So the opposite would apply, where you're basically, okay, we already know that's green, so I'll just delete that, right? And we were up here somewhere in this big move. I'm just going to try and zoom in on the candle so you guys can see. So yeah, so the opposite would apply in terms of looking for longs. You're just waiting for bearish candles, right, on this. So you would put a you know, a short there. So from that level, you'd probably get taken out with this one. But again, with this one, I don't do stop losses because I'm market trading basically. You know, you could have put that there and then gotten out of that bullish candle, right? And then same thing, you wait for the market to form. The other thing is when things are moving sideways like this, right? I don't necessarily just jump in on the next bullish or bearish candle that I see, because when things move sideways, it's usually more explosive either end, right? And like in this case, if you entered a short there, and your stop was say there, I don't know, previous market structure, you'd get stopped out straight away. So again, you only enter when price either hikes up really high, and then you're looking for shorts, or if you're looking for longs, you only wait. So if you're looking for longs, you wait for a crash, right? When it's a flat day or flat candles, you basically just sit on your hands. So yeah, so waiting for that, moving up, you then look for the next bearish candle. So none of these apply because you can see that they've got little tops to them, right? But there's a bearish candle here. So that's where your entry would be, right? In this case, based on previous market structure, if you were using stop losses, your stop loss would be there. And then you could get out, well, in this case, you would get out at that candle. So that would be a pretty crap trade, but you still make money, right? 0.2%. And then, oops. And then same thing, we're in this momentum going down. So then your next entry would be this one here, right? Your stop loss would now be here. And again, you'd be taken out early if your rule was to get out on the first bullish candle. And then the next one would be here. Stop loss would be above market structure, right? Above there. And in this case, the next bullish candle we had was over here, right? And you get out there. So you can see how, like, even with crap or what I consider crap trades like this, or even getting stopped out in some trades or whatever, the risk to reward on this one is 7.84. So you more than make up for it in you know, when it actually starts moving down. And you'll basically see this, have a play around with it. You'll see it on higher time frames. Yeah, I think, does anyone have any questions so far? There's really not much to go with this trading strategy. Like, I've refined it sometimes to going, okay, don't enter on the first bullish candle, enter on the second, or, you know, don't exit on the first bullish candle, exit on the second, or whatever. But really, just Heikin-Ashi, MFI, 6 hour time frame, 1 minute time frame, and then that's your strategy.
Sometimes things are just that simple.
Yeah. I'm going to just to sum up. So hey, you say you don't put stop losses. You're just looking at what the Heikin-Ashi candle's doing.
Yeah. Because
it's
a 1 minute candle, it's too fast. Like, it happens too fast.
Can't set it.
Calculate this and that. So yes, so like I said, that's why it's really important to have your bias on the higher time frame first, right? Look at the 6 hour candles and see what's actually been happening. Is it just a fake out candle, or has it been slowly moving up? This strategy, you'll find it's not about picking the bottoms of a big move. It's the meat and potatoes in between, right? Because you need to see at least what's happened in the previous candles to get your bias to go, okay, the market's moving up, I'm just going to go along with it. And then because you're on a 6 hour candle, you generally wouldn't wait longer than 6 hours to, you know, to get in and out of these trades. What you could do, and what I've done before in the past, is if the trend is going up, then I would put a spot trade on one platform, right, and then just let that run. And that's a spot trade where I would put a stop loss on that properly, like normal trading. And let that run, and then in between, I go on a different platform or open up a sub account and then trade on that with these smaller moves. So it's kind of like having your cake and eating it too. That makes sense,
right?
Dude.
Yeah, and the thing too is also look at predict what days that 6 hour block's going to do. If it's going down, then you short only. You don't count it. Don't counter trend. Don't counter trade. And it's just basically you're just picking the bones of the market, really.
Yeah, exactly. Like on something like this, you know, the area that I would want to trade is when the price action is in this MFI, right?
Yeah.
I don't want to be entering in when it's just at the bottom, because it could still go further down, right?
Yeah.
So something like this, because it's such a bullish candle, that's something that I'm happy to go, okay, like on a spot trade, I'd be happy to put a trade in there, let it continue running up, but then in the meantime, trade in between there as well. Yeah.
Right.
That makes sense.
Yeah. Okay. Cool. Cheers.
Kevin, can you just explain again how you use the MFI with this? Like, at what point do you read the MFI to determine if you go in or not?
So when the MFI is low, right, at the bottom, similar to RSI, when it's around this bottom area, I'm looking for confluence on the candles to show that price is moving up. So in this case, just because the MFI is below here, because the candlesticks are telling me that things are still moving down, then that's not necessarily a good point to get in. plus I would also, I mentioned before, I would also do my TA like on normal candles and my shapes and patterns and whatever, like, you know, the usual stuff that I do, where say on this. So I always start with, you know, this kind of stuff, like the measured moves and things like that. So knowing that we just broke that trend line, just because the MFI is getting to the bottom. See how on the daily, that's where we were on the 18th of April. Oh, sorry, on the 6-hour chart, we were there, right? But price still kept moving down because our TA tells us that over here, when we broke and did a like tiny retest, then there's still, you know, a measured move down to go. So on that particular day, or that 6-hour time frame, let me see what it looks like. Yeah, it's a huge red candle. So you wouldn't, just because the MFI came down here, you wouldn't be looking for longs because it's still red, right? Does that make sense?
Yeah, so basically you do the read the candles first, and then, you know, go through everything that you just went through, the whole process. And then the last thing you do is just to check the MFI to see if it supports what, like the long or the short. Obviously, if it's saying MFI is saying the opposite, if you're doing a long, then it's not a good idea to enter.
Yeah, pretty
Is
much.
that-
Yes.
yeah.
So over here, because the MFI has been you know, teetering around the bottom, I'm looking for when's it going to turn around. Similar to what Marcus was drawing before with the, you know, the curves on the RSI or MFI or whatever. Like, you're looking for when are the reversals happening. And over here, you can already see, like, even with normal candles, we know that this was a long wick, right? The market sentiment and all that sort of thing is somewhat reversing. I mean, like I was saying yesterday, we're not out of hot water yet, right? Until we make some closes or higher highs above this could still turn around and dump on our asses, right? So this technique that I'm doing is, like I said, it's only between 6-hour and 1-minute charts, and I don't like, unless it's a situation like this where it's like last night, I was happy to open a trade down here, got the lucky dip, because it's like, okay, this is a really strong swing reversal, right? But for this particular MFI technique, it's just like 6 hours. It's a green candle today. Cool. I want to jump in and grab some cash. And so I'll just be looking for longs. Like, oh, look at that. In the time that we were talking, right? Or that I was talking, sorry. If we did this because we were looking for long positions, we would have gone, okay, there's the bullish candle there. You can just mark it buy, and we'd be riding this until, okay, let's say we're in this trade now. Let's just watch this play out, right? The things are starting to slow down, and if our rule is get out on the next bearish candle, so we're looking for a flat top, so one of these kind of candles. So it doesn't really matter what the wick looks like at the bottom. We're just looking for a flat top on a red candle, and you can see here we're also in the MFI range to be selling, right? So, and yeah, if you had time to set a stop loss, then you could technically set a stop loss over here, right? Because it's previous market structure. Let's just wait for this to play out. You can see the countdown timer here. Cool, what's happening? So I'll wait till the candle closes because this could still turn around.
If you didn't have time to set the stop loss and you're just like watching it, but then realize, like at some point you got to pull out if it actually goes the other way. So if, for instance, with this one, we see the green candle come up, you enter, it's going long, and then all of a sudden, for whatever reason, it starts going red, then you would pull out, right? I guess there's the same theory as soon as it turns red to a bearish candle, you would pull out. So
Yeah,
so
exactly.
I guess that's your stop loss in that
red.
essence.
Yeah. So this, I'm waiting, see 17 seconds, 15. I'm just waiting for this to close. See how now it's starting to change? And so you can imagine this is why this is something that I don't really introduce to people straight away, because people freak out, you know, and they're like, oh shit, it's going to be red and blah, blah, blah. And then, you know, imagine if you were in that kind of emotional mindset, just then seeing it red and going, fuck, maybe I should pull out. And then you click sell and then all of a sudden it changes to this, and you're like, ah, god damn it, and then it creates this domino effect where you then try to chase the trade and jump in. Like it's easy enough to see this on the screen and go, yeah, this is fine, and oh cool, yeah, it's green and whatever. But when you're in it, and if you've got skin in the game and you're putting, $100, $1,000, $10,000 on a minute candle, some people I know do this on 1 second and 5 second candles. It's freaking nuts. Your
I do that.
yeah, Marcus. Yeah, you can make really good money, but you have to be super strict. Like that's as much as I can say, like because the temptation is there. Like you just saw that candle, Okay, same thing with this, right? It's like, and likewise, that now the temptation is like, oh, should I let this candle play out more? Because what if the price keeps going up some more? And so you really just have to, like before when I started doing this, I used to have a thing on my wall. I'm drawing on the screen, but I used to have a thing on the wall that literally just had the rules, like, red candle, get out, green candle, get in, like, and it's just like stick to that. So, yeah.
So you would wait for the candle to finish, like the actual minute.
Yeah, wait,
and then you make a decision.
And then,
Yeah.
and
And you would do this all in Binance, right? You wouldn't open up Trading View and then have
me,
Binance, or what do you do?
the best results I've had has been doing this on BitMEX, actually, because I've been trading for BTC. But it works on Binance as well. I've done this on Binance. Same thing. On any exchange it works, because every exchange has Heikinashi candles, right? Okay, cool. That's
right. So you're looking at the charts in Binance, like watching it in Binance, not in Trading View or whatever is your preference.
Yeah, whichever one's easier for you. So yeah, so basically I'd be out of that trade now, right? I would just, as soon as that candle closed, hit sell. So yeah, you're doing these on market. You're not doing these on take profit. You could, if you really wanted to be finicky and go, oh, I don't want to pay the market fee or whatever. But yeah, that there is a nice 4-to-1 trade, from just sticking to that simple rule: bullish candle, bearish candle, in, out, in, out. And I've seen, like, obviously, like I've had losses on this where, like, the example you gave, like say if I got in on this candle here, right? And then got out on the next bearish candle, which was here, but actually waiting for that candle to close would be here. That's just zero. Like I would have actually lost, because I would have paid fees, right, to get in and out of that trade. But that zero candle is more than made up for with a 4-to-1. And sometimes I've had trades doing this that are like 21-to-1, like risk reward, right? But yeah, you have to stick to your rules. So okay, so now that this has I'm out of this trade again. What are we doing? We're looking for longs. What can we also see on the candles? Right, we formed this breakout. So I'm now, this is where I would switch to, say, just the 1 hour or something like that on normal candles and see, okay, what's actually happening here. We're kind of forming that ascending triangle, but it's really toppy. Like this is generally an area you can see it's turned around. We're probably going to be going down again before going up, right? Which still aligns with our sentiment for the day, which is bullish on the 6-hour candle. It's still bullish. Like that's not going to change for another 2 hours. So then, yeah, just go back on the 1 minute and just go, okay, I'm just going to wait for the next drop and wait for the next green candle, next bullish green candle. So yeah, it's not a guaranteed win or anything like that, but I don't know, it works for me. And I don't know what to call this strategy. I haven't really seen, I mean, I've seen Heikinashi candles and how people use this. I've seen people trading with the MFI, and I guess if you do some research as well, and I'll try to write things down, but you can sort of mash things together and come up with, your own conditions. Like sometimes this has worked for me really well in conjunction with, and again, this is more like advanced trading, using the TD sequential candles. So TD sequential is another rabbit hole that you can jump in. Where's my? Oh, I deleted it. Sorry. Wait.
Well, guys, bear this in mind that like the things that me and Kevin show you, they may look really easy, but a lot of it is I don't know how to describe, like subconscious decision making as well. So practice this a lot before you commit to putting
Yeah,
a big trade into it. Like really, really practice it. Practice, back test it. Maybe you'll find that what Kevin does doesn't work for you. Maybe you'll find what I do doesn't work for you. Maybe you find a combination of both will work for you. So yeah, like I don't trade the way Kevin does. Kevin doesn't trade the way I do, but we both make money. And that doesn't mean that we're both doing it wrongly. It just means that we're catering it to our personality and how it works. So just whatever works for me and whatever works for Kevin doesn't necessarily work for you. And the only
Yeah.
way that you're going to find out is by testing it out.
Yeah, exactly. Like that's a really important point. Like, use the replay function and back test it. And the other thing I forgot to say is this trading strategy only really works in trending markets up and down. So like I said, when things are flat, you sit on your hands, you don't enter, right? And so like even in flat areas like this, when the candles are kind of indecisive, you don't do that. Just wait for big rises or wait for crashes. Relative. So when I say crash, like wait for a crash relative to what you're seeing on the charts. Like, a little move like this, even though there's a green candle there, and this little move down, that's not necessarily a crash, right? These are crashes, like going from a move up, down, and then move up and down and zigzagging. So yeah, what we're about to experience now is likely considered a crash. And
guys, bear in mind, this isn't a 1 minute chart. So like we're using the word crash quite loosely.
yeah, exactly too. That's another thing. And yeah, so I was talking about TD sequential. So I won't go into how the TD sequential indicator works, but basically it measures 9 candles in a trend and just goes, okay, is this candle lower than the previous, the 4th candle before it? So then it measures 9 candles, and then once you get the 9th candle being lower, that's almost like a confirmation that like, yep, we're trending. But on the 13th candle, it prints another color. So that's what these colors are. And these buy levels, like I've created this myself, but you can use this on a normal TD 9 or 13 indicator. And when the candles change color, then it's a sign to pay attention, not necessarily like buy or sell, but just like pay attention to what's about to happen, right? And you can see here when the candles change color here to yellow, it was like, okay, pay attention, something's going to happen here. It's either going to explosively move up or down. And I've been modifying this for myself, to figure out where are these levels. So you can see even on normal candles, right? You can see that where it's printing these red and green dots on the screen, you can see levels of various supports and resistance. You can see now it's just printed this yellow candle and there's a buy flip happening here. So if I go back to Heikinashi, what I can safely assume is that now that the market is slowing down a little bit, I'm now paying attention to the MFI and going, okay, when's the next bullish candle going to happen here, right? You can see it's already, see I was starting to paint like a yellow candle. So it's like, again, you've got to wait for the candle to close. But yeah, it's something's about to happen. Otherwise, this indicator wouldn't be printing these candles. I just typed in that it's a buy flip, meaning that it's going to flip in reverse, right?
Get started with Binance Margin Trade.
So,
Don't margin, Leanne.
Yeah.
No good.
So yeah, so while we're doing this, you can see that like, if you were in this trade and you were disciplined and following your rules, this is the stuff that makes people move down to like 5-second candles or 1-second candles. This is like, come on, minute, like I don't want to wait for this or whatever. And so yeah, you really have to have your like emotions in check. We keep talking about that, right? Okay, this one. So getting ready now. Obviously, yeah, if you were trading this, you'd have Binance or BitMEX or whatever platform open, and you'd be waiting for this candle to close. And if it's bullish, then you get in. So on something like this, you could preempt it by going, I'm going to put a entry somewhere halfway between the candle. But as we saw before, the candles can change very quickly. But these little signs here kind of give you a little bit more confidence that things could be going your way. One thing that I'm also looking at though is that because we're up here in the high range of the MFI, we could still just turn around here and then come back down. And then okay, there. So see how the candle didn't close bullish, so you wouldn't enter a trade there. So then I guess we're waiting for the next bullish candle, but because we're in this buy flip zone, it's going to happen sometime soon. But then yeah, you now this is the drawback with trading this particular strategy is you have to be on the computer, like or on your phone or whatever. Like that's the only caveat to it, I guess. You could set alerts. I know there are trading bots and things like that actually measure when these candles occur, but to date I haven't really found anything that I prefer. Like some of the bots that I've seen that have gotten pretty accurate have been ones where they enter. There's one where it waits for 3 bullish candles, right, to enter, which means your entry would actually be here, right? Waits for 3 bullish candles, and the same way it waits for 2 bearish candles to exit, which would be here. But then it reduces. So doing things like that means that you're increasing your safety overall, right? Because getting in on something like this means that there is a strong trend already moving up, but it also decreases your risk to reward because you're trading the risk of getting in early versus the reward of being safe in the move. Does that make sense? So yeah, you'll just have to play around with how this suits your level of risk tolerance. But you can see the difference between getting in on 3.83 as a risk to reward versus getting in on a candle like this to 1.56. It greatly reduces your risk reward. But yeah. So anyway, does anyone have any questions, or do you want to wait to see if this plays out and see where we get in next or something? But yeah, it's you can do this on higher time frames as well. So if you were trading, say, the 1 hour and the 4 hour, or 1 hour and 4 hour time frame, right? Same thing. You'd go, okay, what's happening here? You could have gotten in on this candle and then just using what you know about taking profit at previous market structure, you could have just set a take profit there and not be stuck to the computer, right? So say you entered here on the entry of this candle and then set a take profit for previous market structure, which is over here, right? All these tops, you would already be in profit. Your risk to reward ratio wouldn't be that great if you set your stop loss here, right? But that's still, that's a 1.26 risk to reward. So, you've made some money. So yeah, that's still pretty good. My preferred risk to reward, the lowest I prefer is like 1.5. My average is actually around 3.4. So, because yeah, I have some of these trades that, I get 14 to 1 or 20 to 1 or whatever, but yeah, something like this is, yeah, it can be used on higher time frames, but if you're going to walk away from the computer on these, then definitely have a stop loss and a target set up. Yeah, you could also combine. So again, combining what we know about drawing shapes and patterns and things like that. Let's see, we're forming an ascending triangle on this, right? So if you were to go from there to there, and we've got a horizontal about there, right? We're just bouncing in this zone that we know was previously an order block. And based on, you know, some of the indicators here and some of the structure that was formed. Wait, let me get rid of this stuff. Those are some of the trades I did. Yeah. So you could go, okay, my risk tolerance for this is that, my risk tolerance and the outlook is, since we're topping out here, it's probably going to do this and bounce around and maybe form a triangle, and will either come out this end or it'll fail down here, right? And then you could go and do your measured moves and go from, you know, if this was the move from here to here, right? And we're breaking out. If this is a breakout, then that's where the target should be, right? Technically, a previous market structure. If it doesn't break out, then, you know, whatever the next measured move is from say from here, if price was to be somewhere around there, again, we're you know, predicting stuff. We go, okay, the measured move is around there, right? Which is still around market structure, but see how the market structure level here is lower versus when we first did it up there somewhere. Yeah, up here, right? But it's give or take somewhere in there. So if you're using the Heikin-Ashi strategy, you go back to that, those candles, right? And then just set your take profit at that level, somewhere there, you know, with amidst all these other candles. And that is still a good 2.47 to 1. So yeah, that's what I would do. How are we going for time? Oh, 1 hour 46. Yeah, does anyone have any other questions? Because if not, then I'll let your brains sort of take a break and jump off the call. I hope that's been useful for you all, and you can practice doing that strategy, I guess, on paper trading. But yeah, don't get too stuck to the computer. But it is addictive. I'll give you that. Yeah.
Hey, Kev, did you look at that trend spider link?
Oh no, I didn't actually. The trend spider. This one, trendspider.com.
That'll be it.
Okay.
Yep.
Okay, I'll have a look at this. Okay, they use blocks. Oh, cool.
Oh, they use, there's all different things. They're traders who make this platform, and you can set scanners, do back testing, set alerts off pretty much any indicator that you want. You can set sensitivity. So say you've got where you've drawn your support and resistance lines in.
Yeah.
You can set any one of them up as an alert, but send so it's, if it touches it, if it bounces off it, if it goes through it, you can pick like any one or all three of them. You can set a sensitivity to it. So if it gets within a certain range to it, it'll send you a
like an alert.
It'll send you an SMS, or you can hook it up to a webhook. Or
yeah, does it connect to crypto as well, like crypto exchanges, or is it just Okay.
There's I think it's, I'm not sure if it's 150 crypto exchanges. You can't, at the moment, you can't actually trade off it. But you can use it for doing all your analysis, all your back testing. You can scan the market. You don't have to be able to write scripts. There's like everything's there written already, like scripted up for it. You just got to choose what you want, and you can choose like heaps of different stuff.
Okay.
I haven't actually used it. I've only just started looking at it a little bit. I highlighted it to myself a couple of years ago, but I didn't need it for doing the options that I was trading. So, but I always thought it was an interesting thing. But
Yeah, I'll check it out. Trend Spider.
there's heaps of there's stuff on YouTube on it. They've got videos on their website there, and I'm pretty sure, on your virtual day, if you thought it looked all right, you could possibly get them to do a demo on it. And I have seen them. I've watched one demo on it, and they give you a link to a 25% discount. And it automatically puts in all your trend lines, Fibonacci's. Like, you can choose what it wants. It'll do multi-time frame analysis, so you can, if you're trading on your 5-minute chart,
Yep.
you can have your, if you've got trend lines and whatever set up in your hourly chart or daily chart, you can get them to show up on your 5-minute chart.
Oh, okay, yeah. So it does cross chart drawing. Okay.
Yeah. Yep.
Yeah, I'll definitely check it out. Trend Spider. Thanks. Yeah, I didn't see that.
And even like, it's good for someone who doesn't really know what they're doing, to have the algorithms set the trend lines there. But even when you know what you're doing, it can save you a lot of time as well.
Yeah.
Having to go and draw everything up.
Yeah, exactly. Like, at the moment, I use 3 commas, and I've been trading multiple accounts on that, and it's yeah, it takes up time, but got nothing else to do.
Yeah.
Yeah, awesome. Thanks for that.
No worries.
Yeah. So, Karen's asked, have you started using this yet, Trevor? So if you want FIB, RSI, and 30-day RA, it will automate.
Yeah.
I guess so. Yeah, it would do that.
Yeah. I know it. I know it'll automatically put fibs in. I know it'll do the trend lines, and you can set like there's what they call a timestamp, so you can have trend lines drawn in from like if you drew trend lines in 2 weeks ago, but they become irrelevant, you can change it to it does trend lines from today. But you could also have the trend lines left from 2 weeks ago if they haven't played out yet.
Oh, okay.
Like, if they hadn't,
yeah. So then
if they hadn't hit those trend lines, and you still wanted them there, you could leave everything set to that. But when you open up a chart, you can have it, if it sets up everything, it could draw like 2,000 different trend lines on it over like so many hundred candles. But you can filter it to what trend line, like how many trend lines you want that automatically come up, and you can still draw your own trend lines in there as well if you like.
Yeah. Okay. I'll definitely have a look at it, because yeah, that sounds useful for all the charts that we go through in the market.
Yeah. Yeah.
Yeah. Well, if anyone else doesn't have any questions, I'll probably wrap up the call. You can see, just before we wrap up, you can see here that what I was just drawing there was, the different trend lines as well, and shapes and all that sort of thing. And I was trying to pick a target here, but obviously, in this case, we would have gotten out of this trade here already at that candle there, right? And yeah, just waiting for that next crash to come. But we also can see that it's forming this triangle and the the resistance there. So I'm probably expecting that there's going to be a crash somewhere here, and then maybe picking up the order. It'll probably turn around somewhere here, around this level. We're going to be here for a while, like bouncing around on this thing, on this level. So with what Trev was just talking about, actually, that software would probably be good for like keeping these trend lines and previous formations and all that sort of thing on here, because you could see, where we're revisiting a trend line from a previous move or previous market structure. Anyway, I am going to call it quits here, and I hope everybody has gained something from that. And yeah, have a go at the Haikanashi candles. Cool. All good? All right.
Yep. Thanks, mate.
Thanks, everyone.
Thank you. That was great.
Okay.
Thank you.
Bye.